Thanks, Sandeep. Maybe to start with, I think this is a summary of couple of questions that
Yeah.
many of our schemes have come back in the ranking game. They have started performing very well, and few of them are still not there. So, can you tell what has happened with the scheme which is performing well and how it has happened?
So as I said, beginning this year, we have rebuilt our exposure and, when I say rebalance our portfolio, so we have very large exposure towards data center themes, particularly on the power companies. We have very large exposure, telecom exposure, fiber optic companies, and some of the unique data center play. And this theme was the strongest theme. The two themes which has worked, the three themes which has worked in let's say from January 2026 this year, one the best was power, followed by metals, and third was selected pharma names. So these are the three themes which have done very well, and obviously POC also a theme has also done extremely well. So we were very much aligned with this sort of thesis which has played out. We were more prepared in that direction, and I said that. Beginning of the year when April onwards says we say that impact cost has started coming down, which was one of the key reason of underperformance. And we also talked about that we have revamped our portfolio. And when the impact costs come down and risk on opportunity which we got is easy to turn around. I always talk about in the risk on period is easy to improve significantly as compared to playing a high risky game in a risk off environment. So that's one of the reasons why it has done well. And second thing, our sector, apart from sector selection, we also have stock selection was right. And the most important thing which has worked in our favor this time is that we were not present in some of these companies which has corrected sharply in last two beginning January 2026, where we have seen even the large cap names. Some of the stock have fallen single day 10 to 12% also. Luckily, majority of these names were not part of the portfolio. An important sector like IT, which has underperformed significantly, we virtually have zilch exposure. We have hardly any except Oracle Financial. We didn't have any exposure on the tech side. So some of the sector like auto was another area where we have seen a massive underperformance, where we have cut down our exposure significantly. And the beginning of the year, when this crisis started, we have cut down our manufacturing exposure also. So by not having some of the stocks which have beaten down significantly was also one of the important reasons of massive outperformance which we got in last few months.
Um, Sandeep, second question is from Avinash, and he just want to reaffirm that sectorial SIF can be a subset of a business cycle. Is the assumption is correct?
Uh, Partly yes, okay. But keep in mind, like in business cycle is where there's no fixed sector. Here they are saying very focused approach. That's the reason we in bracket we have written focus, because you have only four sectors where regulator has allowed us to run a portfolio. So they are actually indicating that you run a concentrated portfolio, you run a high conviction portfolio, because there are lot many clients who wants a focus approach, high concentration bets. Okay. And that's the reason I always said any thematic schemes or any sectoral funds would be more risky than your normal level diversified fund. But if your cycle is right and you are able to manage very well, then this thematic actually gives you massive outperformance. So the timing becomes very, very vital in this product. So you partly is correct, but not 100%.
And maybe a very linked question is from the Sushil that um, quant business cycle fund has not done so well in the past. So apart from the shorting opportunities, how we are going to manage this one?
So So your observation is right, but what was happening? Yes, we did underperform in 2025 drastically, and not only business cycle, most of the schemes. Okay. And now one by one, all the schemes have improved significantly, including business cycle has improved a lot, has come maybe not to your expectation, but it definitely has recovered significantly. Now, advantage and the SIF product is that you are able to cut down your beta exposure. See what happens in a downtrend when you are not able to short any names and fully knowing the market is being bad and you have to maintain, let's say, 80% weightage in a sectoral fund or thematic fund, then you are actually sometimes stuck because you have to maintain 80% and market is correcting sharply and these are high beta names, then your damage looks much higher. And with the help of SIF that you have shorting opportunity, actually you can minimize that. I'm not saying you're able to control it completely because you're only talking about 25%, but it's a good beginning to have. And I'm sure if industry behaves in a very mature manner, so far they have demonstrated, then maybe regulator will be more flexible to increase this number from 25 to 50%. And that means you get further flexibility to generate some alpha by shorting also. And not only just alpha, what is important for us that this product generates superior risk asset return because I'm able to control my risk far higher than any of the mutual fund schemes.
Sandeep, next question is: can this fund be all four sectors short? That is the first part. And second part is: can this fund have 140% long and 140% short?
So first of all, I'll answer the second part first. You cannot have 140%. Your exposure of long and short cannot be more than 100%. Effectively, no leverage is allowed. Second thing, you can't have a scenario that all four sectors are short. You have to understand, at best, you can short 25% of the portfolio in a SIF, which means, yes, you can have a scenario where you can have three sectors short, uh, which is only have 25% exposure, and one sector, let's say large infra name, and you have 75% long exposure, that is workable. But all four sectors short, not possible.
Okay. Yeah. So, Sandeep, the next question is from Sanjay Periwal, that how frequently you can change sectors in the long short SI focus fund?
See, there's no restriction or timeline associated that we can change every day also if you want. Okay. If you want to hear that. But it's depending on the inflection points. You can do that. Answer is yes. It has this SIF as a product gives you a lot of flexibility and is one of the best tax efficient long short product available in the world. So obviously you have more flexibility to do so. Difficult to quantify. We also don't get into this sort of quantification as data point change, we change it. We don't have any defined rebalancing cycle that every month I will do it, the sector rotation, or every quarter I do. As data point changes, we keep on happening.
Sandeep, next question is from Dollar. It's regarding the markets, that can the markets correct in the short term due to the high crude and the gas rates impacting major industries and peripherals? Also, the risk of high inflation and interest rates on it.
So I said in the beginning of the presentation that how our thesis of April has played out. Obviously, you have seen a very sharp up move in few trading session or the 1 month cycle itself. So can it has potential to consolidate? I will not use the word correction sharply. I'll use the word can it correct and consolidate? Answer is yes, it can happen. But you have to keep in mind that market risk positions are very light. People have not participated this rally. They've actually missed this rally. And now you're seeing that signs of exhaustion on the rupee front, signs of exhaustion on the FI is selling, and obviously some steps which government is taking, and even the recent political victory should actually support the market. So I'm more constructive on the market than negative because whole world is actually quite bearish on India right now. And this is a very classic behavioral data points which we try to analyze and we look forward when everybody try to vomit and give up so easily. That's a time you have to go long significantly.
Sandeep, back to the NFO that Kishore Bagri wants to know that can the longs be hedged like the other SI products apart
Yes.
from the short exposure on specific sector?
Yeah, absolutely right. Good question. We can hedge all our long exposure, like normal hedging is allowed. Only shorting is 25%. So let's say if I'm running, okay, if I'm running, let's say, three sector long exposure, can I hedge those individual names as a true hedging? Answer is 100% yes, you can do that.
Um, Sandeep, I think I have multiple questions about, they want to understand more about the small cap because in the last call you have given a call about the small cap funds. So do you continue to have that kind of a call that if the risk appetite is there, one should take call in the small caps or a mid cap?
100%. We have actually given a very bold call after 2 years. Okay, and we last month I was very vocal saying that this is a time to increase your small cap exposure. We have been increasing our small cap exposure and mid cap exposure, particularly small cap, in most of our schemes. So one should do that.
Sandeep, for a common investor with a very medium level of a risk appetite, it's a good time to invest money through a lump sum or a SIP mode in any of the funds. So,
So I tell you, um, when opportunity is very meaningful, the fear element is the highest. That's what we have seen multiple times. And the end March was also very classic. We have seen small or other not small, very sharp up move in last 1 month. My sense is that even conservative investor should invest because this is not anything substantial. We have not seen. Our risk was two, our risk was rupee, which looks like it's settling down. Nobody can time the bottom so beautifully. Okay. But we have been very lucky this time. So I think it's a time to definitely increase exposure. Provided you have that 3, 5 years investment horizon, it should not be you have only 3 months investment horizon and then you get excited after 30 or 20%, 30% up move, then you say, I'll come. Then it will be very risky. If you have 3 year, 5 year investment horizon, then definitely lump sum amount is also very good at these levels.
Sandeep, next question is from Rajesh Gada. Majority of your sector funds invest in very few stocks compared to the peer group. In this new SIF fund, we have four sectors focused approach. How many stocks you expect in the portfolio? Any thought process to run it more number of stocks or less?
See, depending on the sector, let's say example, if I take infra we are law, then infra is a very large sector. We can have, and suppose we say auto. The auto also has very meaningful company. The moment I say, let's say example, FMCG, then a very limited company comes into picture. Okay. The moment I say insurance, again, very limited company comes, or BFSI, limited companies come. When you talking about you add banking, then basket becomes big. If you talk about IT, again, limited exposure is there. So depending on the sector, okay, if you are saying that, and again, whether you want to get into larger sector or subsector or further subsector of that. So depending on if you are long on a, let's say, infrastructure, by default, the more companies will qualify. If you are long on IT, then limited companies will qualify. That's the way we have to look at it. We have to understand the sectoral basket size rather than saying, what is my approach?
I think Sandeep, we don't have much any more questions on the fund.
Perfect.
Maybe I think the way you have summarized the fund, that this fund is uniquely positioned for the high risk appetite investors who are looking to put money into the thematic funds. So instead of the thematic fund, this is the one fund which can be positioned to your investors because we rotate the money, we rotate the portfolio very fast in this in this portfolio. I think a very unique offering, and you should showcase this product to your investors. And maybe Sandeep, a few last words to conclude the product presentation.
Okay. So thanks for listening to us. See, the way we have been talking for last few months on the SIF front, not only this product, what we will recommend that you should definitely have a very balanced portfolio between mutual fund schemes and SIF. It's not we're launching this product, so we have to give you a pitch. But a combined portfolio SIP and mutual fund gives you lesser drawdown, lesser volatility, superior risk-adjusted returns, better diversification. So it has a lot of advantage. And I'm not saying that you go all out and invest money. A lot of people are actually not participating this phase because of various concern or sometimes exam also is an issue. My only recommendation is you just put every for every client you just put minimum 10 lakh rupees application, let him participate. You should also put your personal money, then you experience it in the next 3 years how it has performed, and then you will able to justify it. I can tell you in next 10 years SIF as a category will be very meaningful contribution will be done on the active mutual fund. Our views as high as 50%, but that's a very bold call right now. People are not able to understand and appreciate, but the way we look at how multi-asset category will be bigger than the flexi cap when we started the fund, and it's moving in that direction. So I'll not be surprised. It's important to participate rather than saying I will watch and see. You will not have that experience unless you put your personal money. One single application of every penny you should put, it's a beneficiary from a longer term perspective. Thank you very much and thanks for your time.
Thank you very much, all the participants, for your time and listening to the presentation. Thank you very much.